across the UK.
This is BBC Radio 5 Live.
Wake up to money.
HSBC's shareholders will meet later today at the bank's annual general meeting. Likely to be some pretty tough questions about how HSBC handled those revelations that it had helped customers to avoid tax by moving their accounts. Well, yesterday, Barclays held its own AGM, and the new chairman, John McFarlane, said it needed to deal with past misconduct and to speed up its turnaround plan. But still more evidence emerges of banks misbehaving. Deutsche Bank was fined more than £1.6 billion yesterday by regulators in the United States and in the UK for manipulating key interest rates. So, are banks really getting to grips with their poor behaviour? Peter Hahn is with us, senior lecturer at Cass Business School and former advisor to the Bank of England. Morning, Peter.
Good morning.
I suppose the banks might say it wasn't the bosses who were doing this. It was the people beneath them who took initiative, but did the wrong thing, and it happened in the past. And these are past misdemeanors, and we should move on. What do you think?
I'm sure they'd like to say that very much. I think if you look back, no boss, or let's put it this way, at the top of the bank said go out and cheat, steal, mislead everybody. But there were probably too many of them who did say go out and make money, and I don't really want to know the details. Thanks very much.
What has actually changed in banking, Peter?
Well, I think today banks are much more alert to where their income streams are coming from, especially unusual transactions, areas that shouldn't be making lots of money that are making more money. There's a lot more compliance, if you want to call it a bit of a bureaucratic side to banks to examine their activities more thoroughly, what people are doing. So a lot of it's happened, but I think the bigger message from the annual general meetings that we're seeing now is that the market's finally caught up with banks. Banks, we were talking a little while ago about the dot-com boom bust, and if you remember, the banks kind of got a little bit left behind in the late 90s. People used to say put .com on the end, right? They'd be worth a lot more. And so banks started growing really, really on an accelerated basis, willy-nilly, sometimes way too many businesses, too many places sometimes. And today the shareholders have caught up and said, hey, what is it that you do best? Figure it out. Get there now.
They tend to pay some people very big salaries, Peter. And as long as people are earning these big monies, is there always going to be a temptation to try to bend the rules to earn yet more money?
Well, I think big salaries actually aren't what causes people to take big risks.
You've got to keep the talent, Peter. That's what they tell us.
Yes, big salaries. The thought process with big salaries is that people want to keep them and stay there. The thought process used to be the large bonus incented you to go out and take big risks because you could get the one-time big payoff that covered your mortgage, your Lamborghini, and you can retire tomorrow. And so what we did have is a lot of pressure to make money quickly. And I think today we're moving towards a compensation remuneration system that's more longer term. Will that change it? I think banks are still, again, as I said, trying to figure out what they do. They're getting a lot better at it, and they're trying to align pay a lot better with their risk.
An old city sage once said to me, if the worst problem you've got can be solved by money, you haven't got a problem. And this is the attitude that the banks have, isn't it? They get into a bit of a mess, they get fined, but it's only money. We can march on. As a lot of people say, why has no one ever been prosecuted? These are criminal acts.
At least those whose financial crimes nearly broke the earth were remorseful.
The states reached a $325 million settlement with Ameriquest. Ameriquest never admitted to any wrongdoing.
UBS did not admit any wrongdoing.
Morgan Stanley isn't admitting to any wrongdoing.
Goldman Sachs will not admit any wrongdoing.
Bank of America is not admitting any wrongdoing.
Who pays $300 million and doesn't admit wrongdoing? So the 9-figure cash settlement is not so much a fine as it is what? A little something for the Justice Department for looking the other way? Hey, good thing Justice is blind because she knows what's good for her, huh? Here's what. She knows she didn't see nothing.
Yeah. No, as far as the settlements go, I couldn't agree with you more. I think really there's been a race to settle too often without finding who's culpable and pushing the trail up. And it's really, I think there's almost a degree of competitive regulation that's gotten into the marketplace today, and banks have reacted to that in many ways as saying this is a cost of doing business.
In other words, you know, if the banks want to settle, it's a positive point for them.
Yes. No, it's clear up till now you wanted to be the first to settle. Right? I think Deutsche Bank's strategy of sort of delaying this process has cost it dearly. I mean, some of the information that's come out of the FCA about their not cooperating is very unpleasant reading. But clearly Bob Diamond got caught in the first settlement process on LIBOR, but it looks like Barclays paid a much lower price than some of the other banks did.
And what did the less harsh punishments for Wall Street accomplish?
A few years after the meltdown, that it's still business as usual inside some of these Wall Street banks.
The reason nothing has changed on Wall Street is because the incentives on Wall Street have not changed.